All right, hi, this is Adam Stern from Renter's Warehouse. Today we're going to review a market that is near and dear to my heart, Detroit, Michigan. Detroit's one of those markets that either you love it or you hate it. You think it's a huge opportunity or you think it's a dog and you don't want to go anywhere near it. Most people that I've talked to in the last 6 years, 7 years, the smart ones, they saw Detroit for what it was 7 years ago, which is probably the best, absolutely the best investments in SFR. And recently, over the last several years, I've been proven, and those people have been proven right with the resurgence of the city itself, the auto industry, and the fundamentals that make Detroit, a thriving market. So today we're going to talk about Detroit. It's a 10-property portfolio, part of a larger 53-property portfolio that is owned by a private investment group. So we're going to take a look at the portfolio right now and interview Christian, who is the owner of the portfolio, ask him some questions about how he manages it, how he maintains it, how he's built it, why he's selling it, and get some good insight for him. So let's go. All right, so this is the Detroit portfolio. You'll see it's 10 properties in and around the suburbs of Detroit, very tightly concentrated. This is all managed currently by one property management company and can continue to be managed by one property management company moving forward. These properties are C-class workforce housing that we're going to hear more about from the owner in just a few minutes. The average rent is about $850 per month over all the properties. The average price per property is just a tad over $55,000 on average. The gross yield and the financials of this portfolio are something that really drive the portfolio's value. The asking price for this package of 10 is about $550,000. At asking price, this portfolio throws off a gross yield of 17.7%, a net yield of 11.3%. Since the portfolio is above the minimum most banks ask for in terms of being able to finance it, you could throw financing on this portfolio and have the portfolio perform in terms of a cash-on-cash return much better. And I'll give you an example here. If you put 25% down and got a mortgage for 6.75%, which is a pretty doable and obtainable mortgage, you'd see your net yield go from 11.3% to a cash-on-cash return of 21.82%, which is phenomenal. Market fundamental-wise, you'll see that Detroit is one of the few markets around the country you could actually buy a home cheaper today than you could for back in 2006, 2007 at the height of the real estate market before the crash. Detroit as a whole is doing about as good as that, although the price points throughout Michigan are a bit higher, which makes Detroit a lower priced, higher yielding kind of market. You'll see that over the last 20 years, the county appreciation for Wayne County has actually been a negative, while the state of Michigan has enjoyed a low but respectable 1.41% appreciation rate versus the national average of 3.44%. Population change hasn't been good in Detroit. It's part of the story. So when we look at population change like this, people moving out steadily over time, we think about occupancy in the portfolio that we're talking about. And in this portfolio, as we'll hear from the owner in just a few minutes, occupancy has been high, vacancy has been relatively low, turnover times are generally quick, which means this doesn't tell the whole story. Population change year over year, versus how many people actually want to live in the houses that we have in this portfolio. There's a story to be told, and you got to understand it. To understand it, you got to understand the overall occupancy in the portfolio we're talking about and the overall turn time it takes to release properties in the portfolio. And we'll go over that. Migration patterns, same story here as population change, not great. Unemployment rate in Detroit is a bit higher than Michigan as a whole. Michigan right now, as of the last census data that came out, Wayne County had a 6.4% unemployment rate, and a state of Michigan had a 5% unemployment rate overall. Job diversity in Michigan and Detroit is pretty solid. About 20% of it is trade, transportation, utilities. About 20% of it is education, health services. Professional business services, manufacturing, and government round out the top 75%. So nice big diverse job base that supports the market. So right now we're going to talk to Christian Frywall and ask him a few questions about the portfolio. Interesting choice, Detroit. A lot of people are scared of Detroit. We've known the troubles it's had in the past. We're not going to hide that. I'm curious, how did you pick Detroit as a market that you wanted to invest your money in?
That's a good question. So we are in the segment of workforce housing and affordable housing.
Mm-hmm.
So Detroit has been interesting to us for a couple of reasons. First, the economic resurgence that Detroit and the Detroit area has had in the recent years, I think that it has reached a momentum that is, driving national attention, and it has gotten so many stakeholders involved that I think it will be difficult to stop.
When you see this population chart and Wayne County is Detroit proper, how do you explain this?
Wayne County is mostly Detroit. So if you look at Wayne County or Detroit, you will see this graph of losing population. But actually what happened is most of the population moving out of the city into the suburbs during the latter part of the last century.
Got it.
So if you take MSA as a whole and add to it the county of Oakland and the county of Macomb, so the graph will totally transform, and you will see almost a flat line going forward.
So if we look at the counties that have the suburbs surrounding Detroit, we'll see a much brighter picture in terms of population change, because again, people aren't leaving the area. They're not leaving the state or the market. They're just leaving the county that Detroit's in.
They just moved north of 8 Mile.
Got it. Can you put a number on what percentage vacancy in your overall portfolio you've experienced over the course of time you've owned it?
On average, a tenant stays about 2 years with us, and we assume a vacancy of 2 months after that tenant leaves. So we have a vacancy of about a little bit higher than you're putting there, which is about 9%.
Thanks for watching. If you want to see the full portfolio, please just click the link in the description. Thanks a lot.